Hi guys, this is Simon with Trade and Perform Coaching. It's been a little while since I've done public trade reviews. I've been working on a project internally, but hopefully I'll have a little bit more time going forward to put these out on a regular basis. And this is the way that at least I tried to give back to the market, which has given so much to me, and help others out. So um, let's talk about some of the basics since it's been a while since I have done a trade review. Although you can see all the trade reviews that I've done in the past are posted up there. So the concept is very simple. The first time that the market moves up into a zone, I look for a counter rotation within an allotted period of time to give me 2 points, right? And the idea is that I have a very high win rate out of each of these zones. Okay, now there are some filters that I place on that trade. I generally try to avoid the first 15 minutes of trading to make sure I don't get caught in an open drive higher. And the other thing that I avoid in general, the other areas I avoid is the New York lunch period of time, and I avoid the last hour of the day. That pretty much leaves me with the bulk of my time between 8:45 a.m. and 11 a.m. to get trades on in ES. I consider this the highest odds time of day to make money, and and then really 12:30 to about 1:45, all of this is Central Time, right? So if you look today, first of all, we started off with an open drive higher as characterized by this humongous gap. You can see that we had here from 2022, we opened up at 2037, and we extended all the way up to 2051. If you'll notice, even with the open drive higher, that each touch the front of the zone yielded us a 2 point rotation lower, and 2051 and a quarter actually eventually yielded almost a 50 point rotation lower right down to the lows of the day. Now, in the market preview that I did this morning, there's a couple of things that we looked for, but I had highlighted the fact that, look, it's really hard for the market to stretch more than 30 points in either direction intraday. Something extraordinary has to happen. And you have to remember there was absolutely no news driving the market today. It was actually one of the features that was odd that we had so much volatility was that there was no news driving it. So it'll be interesting to see, is this just a temporary switch in the nature of the market, or is truly the Fed put, as they've been calling on the market, wearing away, and volatility is going to increase significantly, and I'm really hoping that's the case in ES going forward. So I had pointed out that this morning I do have I usually stay in the trading room for the first hour, sometimes more, if I can, several times a week. And I pointed out this morning that this 2051 and a quarter was a really great trade location. I published the charts to my to the room members in the evening. I've already posted them for tonight for going into tomorrow. And the orange areas are generally considered areas where there's high odds of getting a strong reversal back to the downside. Again, the primary target out of these zones, again, is 2 points. As you increase your trade size, my philosophy is as you can increase your consistency, a high win rate, you take 2 points, but then as your trade size grows higher and building on your previous wins, you increase your trailers as you move along, and you're able to capture more and more points. As you become more advanced as a trader, of course, you can always try to target larger moves if your skill level grows to that point. But this is really designed so that a trader who doesn't have a lot of experience in ES can have a high level of confidence that an area they're trading into will give them a pause, which is the goal of the zone, and hopefully a 2 point rotation out of that. And so this morning, I cautioned on the open drive higher. I did not take the zone. I did take a trade over here. I missed my entry over here. This is a different entry for me. It's not the basic entry, but multiple members in the room took this 2051 and a quarter, and they were able. Most people probably scaled this trade for about 2 points, and then took trailers for 5, right? But you'll also notice that as we came above, first time back into this zone, provided responsive buyers back up. And then you'll notice with the rotation size, this is a rotation of basically from 2051 all the way down to essentially 2041 would have been a 10 point rotation, first time into the zone, and it yielded a 2-point rotation higher, right? And then you'll look, if you look from here, this is this trade location. This is not a zone. This was simply denoting the first hour low right here. And one of the things that I noted was, first of all, if we broke above Monday's high, and then we failed to hold above Monday's high, that was a really bad sign. This is essentially a failed range extension, right? And both NQ and ES failed near the highs and got underneath Monday's high. Now, here was a critical thing you've got to be looking at. So the area between 2020 and 2040, if you look at the volume profile, right, this area has been traded through repeatedly. Okay, so the first time we were in here, it actually traded pretty well in this area. But if you look, ever since then, we have repeatedly traded through this 2020 to 2040 area, and it's become a really dangerous area to trade on the volume profile. And if you look, we saw that expression of that danger come in, and once we got below Monday's high, and this is Globex, this was Globex high. I believe it actually moved to 2037.25 right at the open. It moved up, but I had it marked as at 2035.75. Once we moved below Globex high, we backside tested it, and then again we were below that 2040. And both, if you look over at the NQ chart, you'll see the NQ broke at the exact same time. Look, this is a bad deal. When you get above Monday's high off an open drive higher, then you get trapped below, and then you get below Globex low. And I had noted that this entire area was very poorly auctioned all the way down to 2022. And you can see that once we got into the area, there was very little resistance to the downside, and the market really, really pushed hard. Now, you can also see the next zone that we got to was Monday's low, and you can see right off the top of that zone, we were able to get a rotation for 2 points back up. And then finally, once again, this happened at 12:30. Now, again, most of my focus, as a matter of fact, I wasn't even here for this. Most of my focus is in the primary hours because all I need, look, this gives me one trade. This set me up for a second potential trade here, and then 3 trades. And then if you want to count this rotation off, that would have been 4 trades, essentially that were worth 2 points apiece. And all I need is 2 to 4 points a day to really have a fantastic day. It'd have been nice if I could have carried a short all the way down. I just really didn't dream that we were actually going to trade below 2037. However, I did tweet, I have a private members Twitter stream, and you'll see here that, and this was right before I left for lunch. Let's see if I can find this. Oh, okay. This is 11 hours ago, so it's about 9:44 Central Time. 11 hours ago, I put below 2037 completely unauctioned, which means when you get to a completely unauctioned area, what can happen is there's 3 ways a poorly auctioned area can go off. This is again directly from market profile or volume profile. You can either zip straight through, which was the unusual choice, but the choice that the market made today. Usually it kind of works something like this, where we'll come halfway down, come back up, and then roll to the downside, right? So that is usually the way that it happens. The third way that we can get re-auctioned is we can kind of grind all the way through in a very slow manner. We did not obviously choose that manner. And then you can look in the afternoon. One of the reasons why the afternoon becomes so difficult, even though the zones generally held, these orange areas, again, these are high odds reversal areas. Look, if you look at the normal ranges that we have, they're normally somewhere between all of last year, 10 points and 20 points for almost the entire year. If we're dealing with a 50-point range, you've got to assume that some zones are going to get run over because the volatility has just increased dramatically. And the easiest way to deal with that, for me at least in the afternoon, is to not trade it. But if you're going to trade it, you've got to at least consider reducing size in the afternoon and possibly increasing your stops so that you don't get tagged out in moves that bust these zones behind. Now, this is unusual to get this many zones busted behind like this and above like this, but this is just if you would have looked at the dome, you would have seen how thin it was in the dome. At any rate, the afternoon can become very, very difficult. The volatility was really high. These are 10-point rotations up and down, 10 and 20-point rotations up and down. And if you caught the reversal just right, you did great. If you caught it wrong, the fact is the majority of retail traders are using 5 and 6 tick stops. So it's very difficult for them to catch, even if you get it in a good location, right? Most retail traders get stopped out here. And again, the last hour was very, very difficult. And I generally have a rule of just simply skipping the last hour. When I tend to trade the last hour, I often regret it. So again, most of my focus is in the morning. So looking forward into tomorrow, right? Our key areas obviously become this 2020 to 2022 is key. We got to get over that in order to work our way through. But again, that whole area between 2020 and 2040, we slip through it very, very easily. And so as long as we hold below 2020, that opens the door to test 1995. I believe we have areas of 1995, 1985 below, and then below 1985, I think 1972 is my next area below there. So I've already posted the charts to the members of the room. Again, this is more in an effort to help traders so that are not in the room. The one thing that I would recommend more than anything else, if you're trying to learn how to trade or you're new to trading and you're struggling, first of all, you should never draw down significantly in your trading account. If you're losing money, stop trading until you can at least produce a winning result on paper to begin with. Secondly, always have a written trading plan. A poor written trading plan is better than no trading plan at all. Okay. Number three, have stops and respect them. And this is referring to Mark Douglas. Know your entry, your exit, and your stop. Know your maximum stop for the day, right? And know your exits for your trades when you're entering them prior to entering. The more you have to think while you're trading, the harder trading becomes, the more fear comes over, the more you do things that make you say, why did I do that? That wasn't even close to what I was trying to achieve, right? And there's nothing more frustrating than having a trade, watching it succeed, but you screwed it up because of your entries. And there's ways to fix that. So anyways, this is my first shot at getting back into doing kind of just the general daily trade review. I'm going to try and get this done 2 or 3 days a week and post them on the blog. I will have this up shortly. And if you have any questions, you're welcome to email me at tradeandperform@gmail.com. Really, that's it. Hopefully this helped a few people. This is a hard market. They'll be harder in the afternoon than they will in the morning. If this is truly a true change for the market and this sustains, a lot of people are going to have a really hard time trading ES because they've gotten very used to the what used to be called the Bernanke put or the Fed put on the market. And I think they're going to have to make some changes in their trade plans, most likely, if they want to survive this, and particularly if they want to flourish. So anyways, my name is Simon. I believe anyone can learn to trade. There's lots of great traders out there with different trading styles. Find someone who matches your style and your outlook on the market, and also has similar risk tolerance that you have, right? And then also the last piece, make sure you're well funded if you're trading. It's very difficult to succeed in trading if you are not well funded. It's just a stressful event, and even 100% in a year has absolutely no impact on you, and that really sucks. So that's kind of my piece of advice. Again, I'm looking at 1995 and 1985 for tomorrow. And we'll see if there's other levels that we'll see if we push down further. Today's range, right, was over 50 points. So look 50 up and 50 down for tomorrow because those are how far we could possibly stretch. But I would start looking for counter trades after we extend beyond 20 points in either direction. Again, don't go off of just hopefully I'll start posting these, and what I'm going to start doing is posting my zones to the general public probably after 10:30 in the morning so people can start learning off of them. And anyone who would like a trial into the live market preview, just email me. I offer 7-day trials. It's no big deal. tradeandperform@gmail.com. And at any rate, hopefully this will help out. It's been a while since I've done this, and I'm looking forward to getting back into the swing of things. Have a great night, guys.